You know, there is an absolute tidal wave of money pouring into artificial intelligence right now. But where is all that cash actually going? Well, it turns out two of the biggest players in finance, we're talking venture capital and private equity, they're making completely different bets on the future of AI. And understanding their playbooks, it really tells us everything we need to know about where this whole revolution is headed.
So, let's frame it like this. Think of the AI boom as a modern-day gold rush. The big question is, where is the smart money going? Is it backing the companies that are selling the shovels? You know, the ones inventing the brand new shiny AI tools? Or is it backing the minds, the established businesses that are using those tools to dig for more and more profit? The two investors we're going to zero in on here are venture capital and private equity. Now, both of them are pouring billions into AI, for sure, but they're using completely different playbooks. It's like they're on the same field, but they are absolutely playing two separate games. So let's break down exactly how they each play.
All right, first up to the plate, venture capital, or VC. Their game is all about one thing: funding the next massive disruption.
You can think of VCs as prospectors, really. They're out there hunting for those young, sometimes tiny startups that are working on truly groundbreaking technology. Their whole goal is to get in on the ground floor of a company that could, one day, completely change an entire industry. So, the VC playbook, it's got three main moves. First, they might invest in the core technology itself. I mean, think about the startups building the next generation of large language models, right? The engines behind tools like ChatGPT. Or second, they'll fund companies using AI to solve a very specific problem, like, say, discovering new drugs and medicine. And third, they absolutely love AI-powered software with subscription models, what we call SaaS, because that creates predictable, recurring revenue.
Okay, let's switch gears to our second playbook, private equity, or PE. Now, if VCs are all about funding disruption, PE is all about enhancing the value of businesses that are already well established.
And right away, you can see the contrast is pretty stark. While VCs are out there chasing the new, PE firms look at these mature, established companies and they ask a totally different question. They ask, how can we use AI to make this existing business better, more efficient, and at the end of the day, a whole lot more profitable?
The PE playbook also has three key moves. Sometimes they'll just go out and acquire a company that's already using AI really effectively, maybe a logistics firm that's killing it with route optimization. More often, though, and this is classic PE, they will actively integrate AI tools into the companies they already own to boost efficiency. And finally, they do something called rollups, which is basically buying up several smaller AI companies and combining them to create one big, more valuable powerhouse.
So, we've seen both playbooks now. Let's put them side by side, because this is where you really get to the heart of the matter, the fundamental difference in how they think. And wow, when you put them right next to each other, the divide is just crystal clear. VCs target startups, PEs target mature firms. VCs are searching for the next big thing, PEs want to enhance existing value. It all boils down to their core strategy. VCs fund the creation of new AI, while PEs are all about applying the AI we already have.
And that really brings us to this single crucial distinction. If you remember one thing, make it this: venture capital is funding the creation of new AI, while private equity is investing in the application of existing AI. One group makes the tools, the other group puts those tools to work.
Okay, so we've got these two very different playbooks, but why does this actually matter? Why should we care? What does it really tell us about the future?
Well, understanding this difference reveals the complete picture of where the smart money sees future growth. And it's not just in one area. The growth is in building brand new AI tools, and it's in using those tools to totally revolutionize old traditional industries. You could say it's a two-pronged revolution.
And that leaves us with a really fascinating question for the future. You know, as AI gets integrated into pretty much everything, will that line between creating it and applying it start to blur? As every company slowly but surely becomes an AI company, will these two very distinct playbooks eventually merge into one? Something to think about.